Hey there traders, and welcome back for episode 105 from the StockBandit.tv. It's a place you can always find trading videos to make you better. So on Wednesday, we saw each of the indices tag new recovery highs, which is to say that they hit their highest levels since they bottomed out way back here in March. Now, when we look at the net changes though today, as of the market close, we also see that each of the major averages posted losses on the day. So it was up and it finished down. Usually that's not a good thing. It implies that, some fatigue is starting to set in. And at this point, why wouldn't it? We just saw, for example, here in the NASDAQ, more than a 7% run off the low set just earlier this month. So that's just about a dozen days here that we've rallied more than 7%. So obviously that's a very big move for a major index. And if you were to sprint around the block, you'd probably start a lot faster than you finished. And so that's kind of what we saw take place today and in the past few days. We saw some pretty sharp advances taking place, and then we've kind of leveled off here, and then today we hit a new high and then finished negative. So this poor finish like this kind of indicates that there's a little bit of profit taking starting to emerge, and also the big volume that came along with that today also tells us that maybe more than a few buyers became sellers today. So what now? Do we just declare a market top and start shorting the daylights out of this market? Well, I'm going to say no, because it's just too early for a longer term conclusion like that. We can't rule that out, of course, but it's not that we've got to pick the market top in order to make good money as traders, because at this point the trend is still up. We know that every dip has been bought. We've got higher lows still in place across the board. We've been making higher highs. We just made a new high today. So the trend overall is still up. And although at some point, these dips will not get bought, that's going to change. We aren't trying to outsmart the market here and predict what's going to happen next. All we need to do as traders is simply take note of the price action and just make our moves according to what we see. And right now that's looking like perhaps a short-term pullback could emerge from this area without too much effort, okay? Now please take note of my use of the word could, because anything is possible. However, today's bearish engulfing bars on big volume are short-term clues that perhaps this market and in this particular bounce, right here that we've been in, is starting to tire out a little bit, and we could see some retracement kick in. And it's simply a warning flag, and it's grounds for caution on the long side for the next few days. Anytime you see the prior day's bar exceeded to the top side and then a close beneath the prior day's low, that's an engulfing bar to the downside, which is a bearish engulfing bar. So for the NASDAQ tonight, we closed right here at 2150, and that's a level that I've noted here a number of times over the past few months, and a close below that could of course see some additional selling pressure kick in. It could bring about a move all the way back down here to test this 2085 area. So that'd be right in here. So we've got some room to tumble here if we see some follow through to today's selling. And remember, this 2150 area extends all the way back to multiple tests during 2008. So that's a very important level. So to see us flirting with it here for the past several weeks now is no big surprise, okay? Now for the S&P 500, we also saw a bearish engulfing bar today take place. And we've been tagging this 1100 area. We've hit it 2 of the last 3 days. We actually hit 1101 today, but we never could really post a close above that 1100 level. And once again, that's a level that I've highlighted here a number of times in the past few months. We broke through that level with some serious force about a year ago. And so now we've rallied all the way back up to it, and we're seeing this market really struggle to get through that. So as of today, we're turning back away from 1100 to the downside. And the next stop on the downside for the S&P is right here. This is the 1074 area. And then below that is the 1039 area if we do happen to see today's selling pressure intensify. But once again, that did come on expanding volume with this bearish engulfing bar as we head back down toward recent key level that's certainly proven to be some resistance. It may now act as support if we get there, but if we do break it, there definitely is some room to see this market correct a little bit. Finally, for the Dow, the next level on the downside is right here. This is the 98.50 area. That was an important level on the way up. It did prove to be some resistance. And below that, the next spot would be the 96.50 area. So a couple of key levels here that proved to be important on the way back up could be levels that this market could gravitate toward in the next few days. So exercise some caution out there these next few days. It could be that this market is telling us it might just need a short-term breather. Thanks again for joining me for this episode. I will be back soon with more videos, but in the meantime, trade like a bandit.